just for purposes of guiding us, just for purpose of guiding us, just for purpose of guiding us. Like we have here May 2019, question number 2. May 2019, question number 2. May 2019, question number 2. Do we have this question? May 2019, question number 2. Audit clearance and reporting. Which page? Page number 180. Page number 180. May 2019, question number 2A. If you've gotten the question, kindly screenshot it, and if possible, throw it in our WhatsApp right away. Tell me whether we are there. Tell me whether we have been able to get some good Samaritan who has shared the question with us. They haven't told me whether they have gotten the question. They haven't told me whether there is a good Samaritan who has been able to share the question with them. Today they choose to be very quiet. Today they choose to be very quiet. But the good thing is that I can see my number is growing. Maybe they're using this opportunity to share their message and invite all their friends. All their friends. Yeah. So do we have the question? Do we have the question? I'm trying to look at the charts. Yes. Great. So wanasema, for the first time, the accounts of Mzalendo Limited have been presented as part of an integrated report. Included in the integrated report are several key indicators, what we call the key performance indicators. One of which states the company's profit before tax has increased by 20% from the previous year. However, in the profit and loss account, the increase is 12.5%. Required, discuss the implications of the matter described above on the completion of the audit and on the auditor's report, recommending any further actions which will be taken by the auditor. Ladies and gentlemen, could you kindly try to respond to this particular question? Could we kindly try to respond to this particular question here? So you are the auditor. You've gone in this case here to audit financial statements. You've gone to audit your annual reports, right? And then you realize that there is some part of this annual report that is not factual. The financial statements are showing that the profits have grown by 12.5%. And on the other side, in the director's reports, they are saying that the profits grew by 20%. The profits grew by 20%. So as an auditor, during your clearance stage, what are you supposed to do? What are you supposed to do? The student who will be very aggressively responding to my queries will get 1,000 bob tonight. Even if your responses are wrong, it doesn't matter. So long as you are really participating, it should be quite a participatory class. Quite a participatory class. So I'm waiting. You are the auditor, and you have realized there are inconsistencies. The annual reports are saying north. No. The annual reports are saying south, 12.5, and the directors are up there saying that, hey, the growth rate was 20%. The directors are quite aware that very many people will not go to ascertain the percentages from the financial statements, and many people just trust what they're putting on the face of their statements, director statements. So the auditor, with skepticism, you have been able to see that. You've been able to see that. So what are you supposed to do during the clearance? What are you supposed to do during audit clearance? Are they going to talk to me tonight? I can't see anybody talking to me. I can't see anybody. Yeah, thank you. Great. Okay, now they are talking to me. The auditor should raise, thank you very much, Bahar. Bahar is telling me as a matter of clearance, as a matter of concern, the first thing that the auditor should do is to raise this matter with the directors. The auditor should raise the matter to the directors, here with the directors, for purposes of it being corrected. That is a very good point. You should not straight away rush to making conclusions. Perhaps it is an error on the director's side. So in this case here, you have to prompt them, telling them that, hey, you guys may have made a mistake here. Please correct. Now, what if they decide that they are not going to correct at all? What if they say, no, we are not correcting? What should we do? Seek clarifications. These are the kind of points I'm really looking for. Seek for clarification. The auditor should get more other information to identify material inconsistencies. I love that. I love that. I love that. I love that. Great. Use a modified report. Use modified report. Use modified report. Use modified report. Remember, we have got what we call other matter, other information paragraph. Provide evidence for material misstatements in the financial statements. Try to show these directors that for sure I've got this evidence. You guys are in this case here trying to cheat the public outside there. You're trying to cheat the stakeholders outside there. So the key thing, I don't want really to give a bad opinion at the end of the day. I would want these guys here to do what? To correct the mess, and then we give them a good opinion. Thank you so much. Thank you so much. The auditor should first ascertain the real figures. I love Bahar must be an auditor, must be an auditor, must be an auditor. Thank you very much. I'm not answering that question. I'm not answering that question at all. I'm not answering it. Let's go straight away to May 2019 question number 4A. May 2019 question number 4A. May 2019 question number 4A. Once you get it, please highlight to us that you have gotten it. Give us a thumbs up. Once you get it, give us a thumbs up. Tell us, hey, we have seen the question. May 2019 question number 4A. Do we have that question, somebody? Do we have this question, somebody? Do we have this question, somebody? Do we have this question? Do we have the question? Kwani hamna past papers at AAA? Hamna past papers at AAA ama VP? Helen, remember there is that link which has got all the past papers, all of them, all the past papers. You need to download that the past papers from the link, and then if possible, you print them out. Thank you. So May 2019, question number 4A. Your audit of Wasiwasi Limited indicates that one or more material uncertainties exist regarding the company's ability to continue as a going concern. In view of the above circumstances, discuss how many matters? 4 matters that should be considered in forming your final audit opinion and the potential impact on the auditor's report. RCM, very good. They need to promote Mwalimu, just 1,000 bob. You have this book which has got very good questions and what your answers, 1,000 bob. Buy, place your order tomorrow. Great, great. So, ladies and gentlemen, we are getting issues to do with what here going concern of an entity. You've done your audit, and then you realize that for sure, this organization's longevity is not there. It will not stay for a long time. I can see, for example, the creditors are up there wanting a lot of money that this company cannot provide. So the going concern of the company is in doubt. So how are you going to handle this situation all through the audit clearance process and the reporting process? Great, great. Tusome swali tena. Hii swali kama haijaingia. Sababu kuna mmoja amejaribu kujibu. Hii ni kama haijaingia bado. Tunasoma your audit of Wasiwasi Limited, your audit of Wasiwasi Limited, quite a bad name, indicates that one or more material uncertainties exist regarding the company's ability to continue as a going concern. In view of the above circumstances, discuss how many matters, 4 matters that should be considered in forming your final audit opinion and the potential impact on the auditor's report. The potential impact on the auditor's report. So I need to ask myself, first of all, as an auditor, what is my role regarding the going concern status of an entity? What is my role? What is my role? Right? What is my role regarding going concern? Right? Now remember, we have got 2 bases of preparing financial statements. We can prepare financial statements on the basis of going concern basis. So we have here going concern basis, or what we call break up basis. So the going concern basis of preparing financial statements, ladies and gentlemen, we shall always use it when the company's existence in the future is not in doubt. We know that this organization, just like RCM Online College, our going concern is so super. We shall be there in the long term, right? So in that case here, then we should be able to prepare our financial statements on a going concern basis, meaning that when we put like a figure for receivables, then the figure that receivables asset, we are going to realize it. Right? Our future is good, right? What if today something in this case here was to come and on our way, put a very big stop on our progress, says you guys cannot continue, then there is no harm the directors have done really. Some of these things that come to ensure that we stop doing business are beyond us. It could be like the pandemic, coronavirus, right? So then in that case, the moment you realize that as a director, your going concern now is in doubt, what you're supposed to do is to prepare what here, your financial statements on a breakup basis. If we're to break up today, how much shall we realize? If we're to break up today, if it's property, plant, and equipment assets that we have here, if we break up today, how much shall we be able to get, fetch from the market? So of course, we expect here the liabilities here to be what here to be quite having a low amount, breakup basis. So if the directors, remember, it is the role of the directors, ladies and gentlemen. It is the directors who are supposed to assess and report on going concern. So if these directors have been able to assess the going concern status of a company and found it to be wanting, found it to be in doubt, and they have gone ahead to report on a breakup basis, then I'll issue a good report. I'll issue a good report or a good opinion. I'll issue what we call unmodified. I'll issue what we call unmodified opinion. Unmodified opinion. 2 things. Number 1, they have prepared their financial statements by owning up that things are not okay. By owning up and saying straight away that things are not okay. So they have prepared their financial statements on a breakup basis, and in the disclosures, they have disclosed as such. They've put everything in black and white. There is a problem. So if they have prepared on a breakup, the financial statements on a breakup basis, and they have done proper disclosures, then I'll issue this. But what if these guys, they tell me that, you know what, we have assessed the going concern of this entity, but at the end of the day, we have found in this case here that the going concern is okay. Everything is okay. So they go ahead and they prepare their financial statements on what basis? Going concern basis. But we as auditors, when we are reviewing the status on the ground, we realize that things are south. Things are not working out. We have creditors that we are circularizing here who are telling us that we have not even been paid for the last 2 years. Some creditor in this case will come and tell us that we have even gone to court to sue for bankruptcy. This firm should be wound up. So the moment these guys wanajifanya ati mambo iko sawa na kwa ground vitu tofauti, then there will be a disagreement between the auditor and the directors of the company. Right? And of course, I'll be able to come and tell these directors before I issue a bad opinion. I'll tell them I've done my research and here is the evidence. And if you don't, in this case here, agree to my evidence, then there will be a disagreement. And because of this disagreement, I will be able to issue a bad opinion on the basis of this and this. You know, you must warn. You must warn the directors of the company before you give what here, a bad opinion, because a bad opinion from an auditor will make the company to be closed. Bad opinions, remember, like most of these banks you're seeing here, like Chase Bank. Chase Bank, if you remember the story, the auditor went ahead and gave a disclaimer of opinion that as an auditor, I was not able to form an opinion. He gave his opinion like today, and every investor, every depositor at Chase Bank was at the door the following day, doors of the various branches of Chase Bank wanting to withdraw. Right? So it's not right for you as an auditor to rush and give bad opinions. No. Bad opinions are killers of businesses. And that is why, ladies and gentlemen, it's always important for you to do what here, to do what we call audit clearance. When you're doing audit clearance, you're looking at some of these things. What really will make me not give a good opinion to this particular what here organization? Those things should be discussed with those who are charged with governance in the company. Who are who? The directors, audit committee, etc. Now listen, I'm not doing that question yet. I would just want us first of all to have a quick overview of some of these things here. Once you have that quick overview, it will be easy for us to do what here, to discuss, to do now these questions live. Now, ladies and gentlemen, please give me a minute. I'm so sure some of you may have forgotten something very important. On reporting. Now, generally, we have got two types of auditors' reports. We have auditors' reports, which are what here and modified. Please don't forget this. Auditors' reports that are unmodified. And then number two, we have auditors' reports, which are what here, which are modified. And modified audit reports are the good audit reports that some of us in this case here call what here? Call unqualified. Unqualified reports. So under unqualified reports, don't write any notes. I'll give you notes after this. Don't write any notes. I'll give you notes after this. So under unqualified reports, you as the auditor, you're going ahead, of course, having gathered sufficient appropriate audit evidence given the underlying transactions and found that there is nothing that is really wanting. Then what do? You issue a good report, unqualified report. Yani report bila dosari, report bila any qualification. So in this case here, basically, you'll come and tell the whole world that the financial statements of RCM Online College portray a true and a fair view of the financial position. The financial statements of RCM portray, they are truthful, they are fair. They are truthful, they are fair. Come to modified. Modified is quite a sad situation. And remember that we always modify reports on two grounds. We modify reports on two grounds. Which grounds are these? We modify reports on two grounds. Number one, if the financial statements have errors, if the financial statements are erroneous, so errors. And then number two, of course, if there is a limitation in scope, if there is a limitation of scope. Now listen and listen to me very well. Listen and listen to me very well, ladies and gentlemen. Please listen and listen to me very well. Quite a simple thing. We have what we call material. And then we have what we call here material and perversive. Material and perversive. Material and perversive. Material and perversive. So material, this is for a single item. Material and perversive, this is for plural, when the errors are too many, plural. Now listen and listen to me very well. You come here to audit RCM Online College books. You realize that our sales is okay. Cost of sales is okay. Perhaps the only thing that we have a material misstatement, a material error is depreciation. It's depreciation, single item. Single item whose misstatement, whose error is big, material, single item. So then in this case here, I'll issue what we call a modified opinion. I'll issue a modified opinion. And the modification here basically will be what we call an except for qualification, except for qualification, except for qualification. Please understand that this thing very well, because whether you like it or not, you will get examined from this area. It's an area that never misses in your exams. And they try to tweak it a little bit, but once you have a general understanding, then you'll be able to pin down the examiner. So if it's only a material item, I'll issue what we call an except for qualified opinion. How does that look like? I'll come and say that the financial statements of RCM College portray a true and a fair view, except for depreciation that was misstated by 10 million Kenya shillings. So the financial statements of RCM portray, overall, you know, things are good overall. It's only one issue that has an error, one item that has an error. So here we are saying that the financial statements here of RCM College portray a true and a fair view, except for depreciation that has been misstated. You must quote the amount. Now come here to perversiveness. Perversiveness means big, beyond, many, right? So if I'm auditing RCM Online College and then I discover that their sales are wrong, cost of sales is wrong, we have administration expenses are wrong, etc. Then what should I do? There is no way I will say that the financial statements of RCM portray a true and a fair view, except for sales, except for cost of sales, except for, I'll be called auditor except for. When those exceptions are too many, when there are too many mistakes, material and perversive, ladies and gentlemen, then straight away, we shall come and issue what we call an adverse opinion, an adverse opinion, an adverse opinion. When I come to your organization and then you give me, ladies and gentlemen, a chance to audit your organization. I'm your auditor, auditing your company. You can't tell me that, you know what, minutes are a no-go zone. You can never get a chance of looking at the minutes of the company. You can never do this and that. You can never get into the master bedroom. No. When you give me a job to be your auditor, then automatically you have given me a 360 degrees chance to turn around to wherever I want. Where I want to get evidence from, there is no way you can block my way. If you try blocking my way from collection of evidence, then I'll say you have limited my scope of operation. You've limited my scope of operation. Listen, ladies and gentlemen, here, if, for example, the limitation is coming from one thing, when we came to your organization, you guys were so nice to me. You guys were so nice to us as your auditors. You gave us whatever. If it's this ledger we asked for, you gave us. If it was this particular, for example, document we needed, you gave us. everything. Perhaps the only thing you are not able to give us proper assistance was in inventory count. Inventory count, maybe you never gave us before the inventory count, you must give us, for example, a list of all the instructions, etc. So if we feel that you are not able to give us all the materials that were needed on only one area, then what we shall do is to come here and give what we call an except for qualification, an except for qualification, an except for qualification, except for qualification. So we are saying that the financial statements of RCM Online College portray a true and a fair view, except for the fact that we were not involved effectively in the inventory count. So we're not able to verify the inventory figure in the financial statements as we would have wished. So when we say it's except for, we are singling out one element, one item that has an issue that is misstated. So the qualification, dosari inakuwa ni moja tu. Isianze kuwa dosari 3, 4, 5. Zikiwa mingi, then straight away, that means what here, things are not working out. Now, what if, for example, I come to your organization to audit, and then you tell, every time I come to the door as your auditor, you'll get accountants, in this case, you're running away, all of them. Things in the company change. Even the mood over there changes. Nobody wants to talk to you, even the receptionist. Nobody wants to talk to you. So there is nobody who wants to give you information. If that happens, then there is no way I'll be able to get any evidence. And if I'm not able to get any evidence to support my opinion, then I'll issue what we call a disclaimer. Here I'll come and issue what we call a disclaimer of opinion. At times, and these are things we read in the newspapers, auditors come and then they are told, you know what, Mr. Auditors, our accounts department got burnt down 100% last year. So if the accounting department is no longer there, how are you going to get information? You simply get out of that room and tell the directors straight away through writing that, you know what, I'm so sorry. You appointed me your auditors, but as an auditor, I am needed to ascertain, to gather enough, what we call sufficient, appropriate audit evidence to be able to support an opinion. So which opinion do you want me to really arrive at? And there is no evidence that I'll be able to deduce from you people. So in that case here, basically, I'll not claim that I made any opinion. So it's a disclaimer of opinion. So no opinion status. You must always inform the directors of the opinion you're going to make publicly before you go out there. You must always tell them. Because at times, these guys would want to play cheeky here to see whether you can play their ball. So you step out and write a very good email to them, telling them that, hey, you appointed me, and of course, you know your responsibilities. Look at the engagement letter. The engagement letter will always dictate, will always spell out the management's responsibilities. So don't tell me that you don't have financial statements. It's not my responsibility to try creating financial statements. My role is to look at what you have prepared. My role is to look at the internal controls that you have in place for me to be able to form what an OP. So if you've got nothing underneath, there is no opinion I'll form. Then that automatically becomes what here? That automatically becomes a disclaimer of opinion. Now, ladies and gentlemen, first of all, I would want to know whether we are together. Are we together up to here really? Now, we want to look at past paper questions, but before I do that, it will be very important for me to know whether the discussion is coming up nicely. Great. So then allow me to share some book with you here. This is a book that I'll be able to give you. It's a very important book when it comes to reporting. I give out so many books, but I'll always tell you which one to read for which chapter. So for this chapter called Audit Clearance and Reporting, I would want you guys to make use of this book. Very important book. Very important book, which I would want you guys to use. All right. You see, like now here, the final stages of an audit. I would want you to go and read these on here from page 105. Get to know what subsequent events are, right? Get to know how the auditor's report overall structure looks like. The auditor's report pertaining to going concern. The auditor's report 3 types of what your audit opinions. So today I would want us to look at these types of audit opinions, page number 119. I can start from 105. I can start from 105, and then of course, all right. Subsequent events, I don't have to discuss that at all. You guys will be able to look at that. The auditor's report, overall structure, the overall structure of the auditor's report. So the overall structure of the auditor's report is quite an interesting one. Normally we start with the title and the addressees. And the title, we must call it the independent auditor's report. The word independent must always be there. Independent auditor's report. First of all, it's clearly titled independent auditor's report. That should mean that no one has any doubt about what this document is. It next states to whom the report is addressed, and that is the members, shareholders of the company, So the first thing there is the title and the addressees. And title is independent auditor's report. And then on top there, I know initially we used to have this section of the audit opinion down, but nowadays they want the audit opinion to be on top. So number 2, we have the audit opinion and identification of what is being audited. The opinion paragraph comes right at the top of the report. An unmodified opinion will state that the financial statements give a true and a fair view or present fairly in all material respects and have been prepared in accordance with IFRS. The example of the report shown later in this chapter includes unmodified audit opinion. We'll see later the various modified opinions that may be expressed if the auditors are unable to say without reservation that the financial statements gives a true and fair view. So please don't write notes because I'll be giving you. I would want you to take this opportunity to understand this thing very well. Now, as appropriate, depending on the type of opinion given, this paragraph can be named as, you can decide to give it a title of opinion, just opinion. If you're giving a qualified opinion, you could decide to call it qualified opinion paragraph, right? The title there. Or if it's adverse, you can call it adverse opinion title, disclaimer of opinion. The opinion paragraph must identify the entity whose financial statements have been audited. State that the financial statements have been audited. You must state that the financial statements have been audited. Identify the title of each element of the financial statements and the period audited. So we for example, audited the comprehensive income statement, statement of financial position, changes in equity. You must identify the title of each element of the financial statements and the period audited. Very important, ladies and gentlemen. You can't just come and give us an opinion and then you run away. You tell us that I gave a qualified opinion, then you run. No. Beneath, down there immediately, you must give us the basis for the opinion. This will refer to compliance with ISAs. Compliance with the ISAs is key to the basis of opinion and will refer to the auditor's responsibilities section of the report. It must include an assertion of the auditor's independence and that other ethical matters have been complied with. If the audit opinion has been modified, the explanation would be here too. The explanation would be here too. As appropriate, this paragraph would be called just the basis for opinion, or basis for qualified, depending on how you named this opinion paragraph up there. Basis for adverse opinion, blah, 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 blah. Great. Now, then we have material uncertainty relating to going concern. Ladies and gentlemen, remember nowadays, if you remember the old standards, whenever we had material uncertainty of a going concern, and the directors had owned and said, hey, we have a problem of going concern. This company will not be there in the future. Then what we would do would go, in those old days, would go and say we have given unqualified opinion, that the books, the financial statements of RSM portray a true and a fair view. We leave it like that. We go to the basis for opinion, describe why we gave a good opinion. And then we used to have what we used to call EOM, emphasis of matter paragraph. Emphasis of matter paragraph, where we used to emphasize issues to do with going concern, of course, among other key matters, audit matters. So initially, ladies and gentlemen, going concern used to go under emphasis of matter paragraph. Nowadays, they say no, issues to do with going concern are so grave, and we need a special paragraph of capturing any material uncertainties regarding going concern. Now listen and listen to me very well, ladies and gentlemen. Here we are told material uncertainty relating to going concern, if one, a separate paragraph is required if there is a material uncertainty relating to the going concern of the company. The need for such a paragraph is covered more fully in the following chapter. You shall be able to see. This paragraph is not a modification of the audit opinion, provided the uncertainty has been adequately disclosed by the directors in the notes to the financial statement. So if the directors have disclosed this issue of going concern, we are not going to modify. We shall give, in this case here, a good opinion. Nevertheless, material uncertainties relating to going concern must always be captured. And then we have got this thing that you must have seen in your exams of late quite a lot. Key audit matters, KAM. Key audit matters are those matters that were of most significance during the audit. Ladies and gentlemen, key audit matters, are those matters that we had back and forth with the directors. So we could, in this case here, through our professional skepticism, raise an issue, right? And the directors in this case here could get back to us. So in talk of key audit matters, it's not every matter becomes key. Normally, key audit matters are those matters of disagreement. So if there are matters of disagreements that we kept on, in this case here, engaging the directors, even if we convinced them and they changed those things the way we wanted them to be changed, we still have to bring them here just to take care of what here? Future audits. Let the future auditors will be taking over from us, would want them to be aware that there were these issues that these directors wanted to do, wanted to conceal. Key audit matters, very important matters that must always be disclosed. Now from there, we have this emphasis of matter paragraph, very important. The paragraph is used to draw users' attention to a matter that has already been properly disclosed in the financial statements. For example, a note stating that there had been a fire at the company's premises after the date of the statement of financial position. Ladies and gentlemen, if you remember very well, emphasis of matter paragraph, we use EOM nowadays to capture, to work with the subsequent events. So whenever you have subsequent events, events that come after the statement of financial position date, before you sign your auditor's report, all those events like fire, etc., will be under EOM, emphasis of matter paragraph, emphasis of matter paragraph, emphasis of matter paragraph. Great. Now, from there, we have the other matter paragraph. Other matter paragraph. Those matters now that are not key. Audit matters, we shall bring them here. Under other matter paragraph, like where I work, we have some clients that are in different jurisdictions, or rather that I have like subsidiary in one jurisdiction, one country, another subsidiary in another country, etc. So you get, for example, a company that is in Sweden is required to report using IFRS, and then they have their own Swedish GAAPs, Swedish generally accepted accounting principles. So at times you may get that IFRS and the Swedish GAAPs are in conflict. So when they are in conflict, ladies and gentlemen, really, this can't be a key accounting matter. This should fall under what we call other matter paragraphs. Other matter paragraphs. Because it's not really that the directors wanted to hide a few things here and there that will have to have so much back and forth with them trying to convince. Even you yourself as an auditor, if you're given to do a reconciliation, you can't satisfy. So the difference is that they could not go as per the IFRS. They had to go as per their local standards because of the law. So it's something that is understandable, but you need to bring the stakeholders of this company up to speed by having what we call other matter paragraph, and then you bring that thing down there. Great. So you're told here other matter paragraph. For example, an audit covers financial statements, but does not cover the director's report. No, this other information, sorry, other matter. This paragraph is used if necessary to communicate a matter that is not presented or disclosed in the financial statements, which is relevant to the user's understanding of the audit, the auditor's responsibilities, or the audit report. Circumstances in which other matter paragraph may be necessary, where the auditor reports on two sets of financial statements prepared under different general purpose frameworks, e.g. a national framework and IFRS. Actually, most of the times, this is what we see under other matter paragraph, where the financial statements have been prepared for a specific purpose to state that the auditor's report is solely for the intended users. When in this case here, you'd want to run away from liabilities in future, it's important for you to say, hey, I was hired by this bank to audit these financial statements. So whatever opinion I'm forming here is only applicable to KCB Bank. So if these guys take this report to another bank, which in this case here goes ahead and gives them a loan on the basis of that report, you can easily, ladies and gentlemen, come and say, hey, look at the other matter paragraph had stated that this audit was purely for who? KCB Bank. So in this case, those disclaimers should come under what we call the other matter paragraph. Other matter paragraph. Great. Now, then we have got like the question that your examiner was asking you. The question that your examiner was asking you falls here. Other information paragraph. Other information. Remember, ladies and gentlemen, the annual reports. The annual reports, what we call integrated reports. Like this examiner started by mentioning there, if you remember this May 2019. They started by saying for the first time, the accounts of Mzalendo Limited have been presented as part of an integrated report. Included in this integrated report are key performance indicators. And in these key performance indicators, we are told that the directors are saying that the profit grew by 20%, but on the ground, in the financial statements there, the profits never grew by 20%, they grew by 12.5%. So you see, if you remember, for those of you that I taught in QA, when you guys were very young, in those good old days, those guys that I taught in quantitative analysis, I taught you a topic called integrated report, or rather integration. This is an elongated S for summation, elongated S for summation. So an integrated report is that report, ladies and gentlemen, that has got financial statements, environmental matters, governance matters, all of them lumped together like this. When I go to audit, of course, we are told up there, I'm auditing what your financial statements. And they're normally 5 sets of financial statements. They're normally 5. They're normally 5 sets of financial statements. Do you know them? Do you know them? Those 5 sets of financial statements that an auditor has to audit. Do you know them? Do you know them? They're normally 5. Let me see, we'll be able to speak about them very fast. They're normally 5. Do you know them? Do you know them? They're normally 5. Do you know them? There is nobody who has been able to tell us, for example, the first one, cash flow statement. I love that. Cash flow statements, quite key component of financial statements. Trial balance, no. Statement of financial position, yes. Income statement, yes. We have statements of changes in equity, yes. Those are now 4. Income statement, we call it comprehensive income statement nowadays. We don't use the word balance sheet. We use statement of financial position. We have statement of changes in what year? In equity, right? Of equities. Then we have the cash flow statement. And then lastly, there is last one, the last one, the last one, the last one. The last one is the notes to the accounts. Those have to be audited. Notes to the accounts. Those have to be audited. The disclosures have to go through the auditor's lenses. All those teleconomy are trying reconciliations, blah, 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 blah. This is a wongo. This is a wongo. The 5 sets, and I'll use way up here, hizo. But now remember, ladies and gentlemen, we are saying something very important. If it's an integrated report, we expect, ladies and gentlemen, to have what we call the triple P, the 3 Ps. So we have here the profit. We have something to do with the planet. We have something to do with people, right? Right. We also call it integrated report. We also call it the famous what here? The CSEG model, the SEG model, that you must report in terms of what here? Your social, especially these 2. Your social activities, environmental activities, then we have the governance activities like that. Very, very important. So as an auditor, I'll only be looking at so keenly the financial statements. But what do you think of this? What is our responsibility regarding, for example, the director's statements? We cannot allow the directors to go and cheat outside there. We also have a responsibility over them, and our work for this non-financial information, our work is basically to check for any inconsistencies. And if we find that there are inconsistencies, because we call this one here other information, the main information is what? Those financial statements. Because we call this other information, so as an auditor, should we find inconsistencies here, social, environment, governance, where they're trying to cheat us, they have planted, like I saw EABL last year saying that they have planted over 1 million trees. I would want to know, where have you planted those 1 million trees? I would want to know. I can even get a valuer to go there, right? Because if they say they have planted 1 million trees, right? And then later on, people discover that they only planted 10, these guys will go to the media. And when they go to the media, of course, they will tag along my name as an auditor. That is why ISA allows us, ladies and gentlemen, to straight away also look at the other information and have a special paragraph in our auditor's report called other information paragraph. Other information paragraph. So under other information paragraph, what are we saying here? Under other information paragraph, we are saying, for example, an audit covers the financial statements, but does not cover the director's report. So what if the director's report contains something that conflicts with the financial statements? The audit opinion cannot be modified because it does not cover the director's report. But perhaps the shareholders need to be alerted to this. This can be done in a paragraph headed other information, other information, other information. So, ladies and gentlemen, I think I'm really talking too much tonight, which is not usual. I would again want to get feedback, whether we are together up to here. Are we together? Are we together? Don't bother with the notes. Remember, notes, I'll give you the notes. All of them. I'll give you all the notes. Yes, I'll share the booklet. Yes, I'll share the booklet. I'll share the booklet, but only if you are in the paid group. If you are in the paid group, you will get the notes. If you are not in the paid group, you need to join us immediately. You need to join us immediately by giving us a call. Why should you stay outside there in the cold and the exams are coming? You need to call us immediately. You need to be part of this team. That's our number, easy number, easy number. The other easy number we have is 0719 525 1000, like that. And you call us. We charge only 3,500 for Zoom only. For Zoom only. If you want Zoom plus our videos, then you add an extra 2,000 per paper, like that. Great. 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 Now, other information paragraph. Those are the kind of languages, if you happen to mention them, in some of these questions, you can never go wrong. You can never go wrong. Like now here in this May 2019 question number 2A required, they wanted us to discuss the implications of the matter described above on the completion of the audit, on the auditor's report, recommending any further actions which would be taken by the auditor. Of course, this falls under the last topic called audit clearance and reporting. Audit clearance and reporting. The first thing that I will have to do, ladies and gentlemen, there is to ask the directors to ensure that their KPIs are aligned with the financial statements. That's very important. It's a good procedure. So in this case here, you know even how you start this kind of a question, I will first of all inquire as to whether the directors are aware that there is a difference between what they're telling people in the director's reports vis-a-vis what is on the ground. I would start by making that inquiry. And of course, as I inquire, I'll not tell them to respond to me verbally. I would want this to be a serious working paper, because I know it's a working paper that later on can even find itself in a court of law. So I would want them to give me a representation letter telling me that, you know, whatever we have stated is very correct. Take that as a working paper received, file in the audit file. Right? I'll try my best to ensure that they do what they make the changes. Now, if they're not able to make the changes, ladies and gentlemen, this kind of a question, students normally will get a 0. They will get a 0 because they don't know that they will not, in this case here, consider first of all the modification, right? But unless in this case it is the financial statements which have an error. They can't modify because of the other information. What they'll do, because it is, if it's the other, please get me very well. You know, I'll have to do a lot of tests to see whether it is the directors who are wrong up there or it's the financial statements. If it is the financial statements that are wrong, then automatically I'll consider all those things like qualification, it is even adverse, depending on the materiality, pervasiveness. But if the directors who are wrong up there, I'll simply open a special paragraph, give it a title, other information paragraph. It is where I will bring what here, that issue of what here inconsistency. You see, like now, without mentioning that thing, other information paragraph, utaanguka. Unapata mwanafunzi anakuambia, lakini mwalimu ulitufunza namna hii, mimi nashangaa mbona naanguka auditing mara 4 mara 5. Kwani nimerogwa? Hakuna kurogwa, haujajua audit vizuri. Auditors examiners hawezi kukuachilia kama hujajua vitu kama hizo. Like, where do we take this matter? These are key audit matter. I need to have a key audit, blah, 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 blah. You must understand this thing very well. Right, 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 right. Great. So, ladies and gentlemen, you can see even in the answer there, in the auditor's report, we have written the answer there that if management refuses to change the KPI and the material misstatement of the KPI remains, the auditor should describe the material misstatement of the KPI. The auditor should describe the material misstatement of the other information in the other information section of the auditor's report. Narudi hapo, sijaanza kujibu maswali, bado sijaanza kujibu. Nataka kwanza tupate general understanding ya hii chapter. General understanding ya hii chapter. Ukishashika hii general understanding ya hii chapter, utakuwa sawa masomo najibu wewe peke yako. peke yako. Ladies and gentlemen, we go straight away to the next thing. Remember when we talk of the reports, auditors' reports, from the word go, it will be very important for you to spell the responsibilities of management and those charged with governance for financial statements. Very important, very important. Even these has to come up in my auditor's report. So this matter will come up in the engagement letter when I'm starting this process and when I'm barring the entire thing. Responsibilities of management and those charged with governance for financial statements. This section is very important and points out that it is the management's responsibility to prepare the financial statements in accordance with IFRS, to maintain the system of internal control and to consider the going concern position of the company. So what are we learning there? We are learning, ladies and gentlemen, 3 key themes. The responsibility, I normally see some of these questions in the exams and students are not able to answer them very well. The responsibilities, which you must spell out, ensure that the directors understand. Tell them that they have very many responsibilities, including, in this case, here, running the company. Managing the company is a tall headache. But for us here, for purposes of auditing this organization, you managers have got 3 key responsibilities: to prepare financial statements, to ensure that you put in place strong, adequate internal control systems, and to ensure that you assess your firm in terms of what you are going concern, in terms of going concern, those 3 things. And then, of course, there below, I'll come as well and say my role as an auditor. Of course, my role as an auditor is not to do any of the 3. My role as an auditor is to provide an opinion. My work is very easy. Provide an opinion as to the truthfulness, the fairness of the financial statements that you have prepared and the general operations of the organization. So, ladies and gentlemen, we are told here the auditor's responsibilities are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes their opinion. Great, great. Now we have here name of the engagement partner. This is very important. Remember, in those old days, we could have organizations, audit firms signing. You could get, in this case here, an auditor's report with PwC signing. No. Nowadays, it has to be a person. You will sign as CPA, Joshua Aura, write your ISPAC number or auditor's license there. Signing for who? PwC. Very, very important. Very, very important. So we are told here, name of the engagement partner, address of the auditing firm, date the auditor's report was signed, and the auditor's signature. So finally, the auditors must sign the report and must give their address and the date on which it is signed. The date of the report is very important because before that date, the auditor has an active duty. The audit is not yet over. The auditor should be investigating whether receivables are being paid and inventory is selling at above cost. It is what we call the subsequent events. After that date, the auditor has a passive duty only. This means that the auditor is not on the lookout for events affecting the truth and the fairness of the financial statements. But if they are brought to his attention, for example, because of media or whatever, then he has to act. And the action here will basically be to inform the shareholders. You have big responsibilities as an auditor. Great. Now, ladies and gentlemen, I would want to zero down to key areas. Like this ISA 701, communicating key audit matters in the independent auditor's report. The first thing to note is that the auditor only reports on key audit matters in respect of listed entities selling their shares at the stock exchange. The auditor shall determine from the matters communicated with those charged with governance, those matters that require significant auditor attention in performing the audit. In making this determination, the auditor shall take into account the following: areas of a higher assessed risk of material misstatement or significant risks. Significant auditor judgments relating to areas in the financial statements that involved significant management judgment, including accounting estimates that have been identified as having high estimation uncertainty. The effect on the audit of significant events or transactions that occurred during the period. The auditor therefore selects only those matters that were of most significance in the audit of the financial statements of the current period, and therefore are the key audit matters. Key audit matters are therefore identified by starting with all matters communicated. You must have communicated these matters to the management. Determining the matters that required significant auditor's attention in performing the audit. And then the most significant of these are the key audit matters. Listen. If the auditor disclaims an opinion on the financial statements, i.e. very rarely, there will be no key audit matters section in the auditor's report, because the auditor has not obtained the evidence necessary to form that's fairly straightforward. Fairly straightforward. Ladies and gentlemen, I would want you to understand this thing very well. Remember, this is at your discretion. This is at your discretion. You must have handled so many matters during the audit. For these matters here to be called key audit matters, number one, such matters, there must have been communication between you and who? The management. You must have been pushing them to make changes. Or the matter was so complicated, like anything to do with the IFRS 9. IFRS 9, financial instruments. If a company has got financial instruments, then that always has to fall under key audit matter, because valuing financial instruments is not an easy thing. There'll always be disagreements back and forth. We would want even you to bring in a valuer, etc., key audit matter. Number two, ladies and gentlemen, of course, it is you who is going to judge. If there were 15 matters, we don't want to have more than 4 matters going under the CAM. So out of the 15, using your judgment, which ones are key? Those ones are the ones which go to the CAM. Very, very important. Very, very important for us to grasp this. Key audit matters. Key audit matters. Now, I would want us to look at, for example, Safaricom Limited, and see what are its key audit matters. Key audit matters of Safaricom. So I would want somebody who is very fast to Google and give us the annual reports of Safaricom Limited. We go practical a little bit. We want to go practical a little bit during our short break. During our short break, it's important we get to see how Safaricom, so we are Googling, all of us. What are we Googling? We are looking for the annual reports of Safaricom Limited. The annual reports of Safaricom Limited, and then you go to the auditor's report directly. Take your time, take your time. After all, it's break. After all, it's our break time. Now we are going practical, because I expect you guys to start producing these statements as soon as possible. As soon as possible. As soon as possible. I expect you guys to be big men, the women outside there. So now we are looking for the annual reports of Safaricom. Annual reports, Safaricom. Great. Please remember, we are able to get that particular report. If you're able to get that report, just ask to share your screen with us. Go to the auditor's report and share your screen with us. So here we are. Are you able to see my screen? Are you able to see my screen? Yeah, even IFRS 15 is not an easy thing. Are you able to see my screen, my friends? They're not talking to me. They're not talking to me. They're not talking to me. At least Lily has confirmed, yes. So you can see that their auditors are Ernst & Young. Look at the title, Report of the Independent Auditor to the shareholders of Safaricom PLC. And as I told you, opinion has to come on top, always. Immediately after the title, give us the opinion. We have audited the accompanying consolidated and separate financial statements of Safaricom public listed company and its subsidiaries, together with the group set out on pages 160-34, which comprise the consolidated and separate statements of financial position, blah, 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 blah. All those. In our opinion, the consolidated and separate financial statements present fairly in all material respects. The consolidated and separate financial statements of Safaricom PLC as of 31st March 2021, and its consolidated and separate financial performance and the consolidated and separate cash flow. They're basically listing, using a very difficult language, they're listing those statements for the year, then ended in accordance with the International Financial Reporting Standards and the requirements of the Kenya Companies Act 2015. Then below, immediately there, we have the basis of giving this good opinion. So the basis, we conducted our audit in accordance with the ESAs. Our responsibilities under those standards are further described in the auditor's responsibilities for the audit and the consolidated and separate financial statement section of our report. We are independent of the group and the company in accordance with International Ethics Standards Board for Accountants Code for Ethics for Professional Accountants. All right, so they continue there, We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. I would want you guys to go and read really this thing in detail on your own. Key audit matters, Key audit matters are those matters that in our professional judgment were of most significance in our audit of the consolidated and separate financial statements of the current period. These matters were addressed in the context of our audit of the consolidated and separate financial statements as a whole and informing our opinion thereon. And we do not provide a separate opinion on these matters. For each matter below, our description of our audit addressed, the matter is provided in that context. We have fulfilled the responsibility described in the auditor's responsibilities for the audit of the consolidated separate financial statements, including in relation to these matters. Accordingly, our audit included the performance of procedures designed to respond to our assessment of the risks of material misstatement of the consolidated and separate financial statements. The result of our audit procedures, including the procedures performed to address the matters below, provide the basis for our audit opinion on the accompanying consolidated and separate financial statements. Now, the key audit matter applies equally to audit of the consolidated and separate financial statements. So we have here key audit matter. Revenue recognition IFRS 15, just like IFRS 9. Occurrence, completeness, and the measurement of recorded revenue given the complexity of product systems and IFRS 15, revenue from contracts with customers. So be able to assess this and see how it was addressed. We understood and tested the design and operating effectiveness, blah, 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 blah. So key audit matters have to be there. You can see they have many of them, 15. They have 4 ETC, ETC. They must be having many of them. ETC. So they have the other matter paragraph. You can see other matter paragraph. We have other information paragraph. We have auditors' responsibilities for the audit of the consolidated and separate financial statements, ETC. So if you guys have the time, I would want you to go and read this thing in full. It's so important for you. It's so important for you to understand this. It's so important for you to understand this because it's a whole chapter. It's a whole chapter which is very common in your exams. So, ladies and gentlemen, I would want to stop there for tonight. And then we had an agreement which we need to agree on today. The agreement of 1 hour, 1 hour, instead of having like 2 whole hours, this is a class of talking. We want to have like an hour. So, but you see, I'm free between 7 p.m. and 8 p.m. Like tomorrow, I'm free between 7 p.m. and 8 p.m. You can do like an hour, like thrice in a week. We really go very far with this subject, like thrice. So it's 7. Yes, notes I'm sending Evelyn. So long as you are in the paid group, you will get them. So can we meet tomorrow at 7 exactly? Will you guys have arrived home at 7, 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 at 7? Maureen says yes. Great, 7 is okay with me. Great, cheers. So tomorrow at 7. So thank you very much. And I hope, especially for the new students who have joined us for the very first time, it's my hope and wish that you guys have enjoyed today's session and you're going to make an informed decision to join us immediately. No free again. We can't for free. We have a big company to run. A company that has got over 50 members of staff. If I offer free, then we can't pay these people really. Or you have taxation tomorrow. So which day then? So the day after tomorrow, right? Friday 7 to 8. Friday 7 to 8. Friday 7 to 8. Or Monday to Wednesday. Monday to Wednesday. No, you normally don't do your AAA from 7 p.m. Mine is 7 to 8, and then you take up your normal audit class from 8. Now, these students, we are not communicating. These 7 to 8 classes will not interfere with your normal schedule. Your normal schedule is 8 to what time? Okay. So then give me solutions. Let's put it 7 to 8 from Monday to Wednesday. Very good. Like if you tell me, Mwalimu, let's do it a morning class, 5 a.m. morning, and we start tomorrow, I'll be very happy. If all of us can agree, just 1 hour, morning class, 5 a.m. to 6 a.m. or even 4 to 5. I don't mind. I'm a morning person. Somebody is now bringing in some very good, I support morning. Nancy McKenna, it's quite unfortunate that you chose to miss your LM. You shouldn't have missed your LM. Morning, great. Morning. So that amesema 4 hapana. So 5 to 6. 5 to 6. We are voting now. And that vote, I should have stopped recording. How can I record all